Joining me now for a look at the state of the US and Europe, I'm joined by Thomas Herrmann, global economist for Credit Suisse. Thomas, good morning. Thanks for joining us.
Good morning.
What's the big message, Thomas, we're going to gain from the release of today's US GDP report, which should show an improvement from the second quarter?
I mean, the message is that we're still slower than after the post-recession rebound, which was, of course, very strong, but which was driven very strongly by inventory buildup. And the message today is, as you say, third quarter is stronger than the second, and the composition generally looks better, even though the growth rate itself is still very meager at probably just above 2%. We're expecting that consumer spending is supporting gradually the recovery. Investment spending, and that's an important one, is not as supportive as in the second quarter. We saw that from a number of indicators. And the big drag that we had on the second quarter numbers, which were only 1.7% from net trade, which will be much lower. So overall, slightly higher number, but still much lower than after the post-recession during the post-recession rebound.
And Thomas, is 2% enough to create more jobs?
Well, probably not. I mean, the initial jobless claims numbers yesterday were a bit better. Generally, the job market development is really very, very slow still. I mean, the payrolls next week might show a bit better numbers, but nevertheless, I mean, the unemployment rate is still hovering at around 10%, and that's certainly a very uncomfortable zone for the Federal Reserve. Does
it set the stage for the announcement of more QE next week, Thomas, by the Fed?
Well, it certainly does. I think that's undisputed. The Fed increased expectations in the market so much, there's no way the Fed can disappoint here. However, they've kind of paddled back a little bit, and it seems more likely to us now that they will not announce kind of a shock and awe, or will not make a shock and awe announcement with a very big number. Instead, it seems more likely to us that they will step out with a smaller number, say 100 billion, for example, as a start, but at the same time show the clear commitment to do whatever it takes really to get the economy moving, to get credit flowing again, and in the end, of course, to get job growth in the US, which is very crucial.
Is there concern, Thomas, that the congressional elections next week could lead to political gridlock, which could in effect hurt policies to stimulate the economy? I mean, are you worried about these elections and the potential ramifications?
Well, the gridlock is certainly a concern because, as you said earlier, the Republicans are likely to get the majority in the House. And then, of course, you have the different majorities in the two chambers. That is clear. That's prone to lead to gridlock. Nevertheless, I mean, the implications on the fiscal side, it seems likely that at least parts of the tax cuts from the Bush era, still 2001, 2003, will be extended maybe for a year, maybe not for all income groups, but at least partly. Overall, the political decision-making will become much more difficult in this environment.
Final question, Thomas. We saw Irish yields inch higher yesterday, Portugal as well, and they're going back to, or inching towards, record high levels. The premium versus German debt as well. Are we entering a period of concern for the periphery nations once again?
Well, I think there's still a lot of uncertainty about their ability to really reduce their deficits meaningfully and to halt the increase in their debt levels. I mean, in Portugal, you have these political uncertainties because there's no real big agreement how to proceed. That causes uncertainty. In Ireland, the cuts are very drastic. I mean, the austerity plans are very drastic, but then again, the economy is doing so bad that you know, the cuts you just made are kind of being evaporated in a way. And that, of course, leaves a lot of uncertainty. And we see this divergence within Europe really strongly continuing, with Germany powering ahead and the others still facing a lot of big challenges, the smaller countries in particular.
Thomas, thanks for joining us today. Thomas Herrmann there from Credit Suisse.